Welcome to Inside India. Happy Monday. I'm Amitoj Singh and these are your headlines. Asian stocks are on the move higher as investors push up bets for a December Fed rate cut. The dollar strength not helping the Indian rupee, slumping to record lows and closing in on that 90 level. And Prime Minister Narendra Modi leading bilateral diplomacy at G20 with notable absences from the US and Chinese leaders. And India enacts sweeping labour law reforms, its biggest overhaul in decades as the government looks to simplify rules to spur growth and investment. All right, we're going to start with a look at the Asian markets. It's mostly green. If you take a look, remember that markets in Japan are shut today for Workers' Day. Asian shares, US equity index futures, they rose after a volatile week as optimism grew over potential Federal Reserve interest rate cuts and reports that the US officials may actually allow NVIDIA to sell chips to China. Last week, Asian markets had declined across the board as traders fled from tech stocks and heavyweights like SoftBank, Samsung Electronics, and Baidu. But take a look at right now. It is looking very green. You're looking at Kospi really leading the charge there at 1.52%. But let's also give you a sense of what's happening with the Indian markets. They're going to be coming online in about 45 minutes. GIFT Nifty futures indicating a bit of a muted start. But remember, India's benchmark stock indexes were poised to open higher on Monday ever since Friday because that's when you saw a bit of a shift. And they're tracking gains already through GIFT. Because of other Asian markets, rising expectations of that December rate cut by the Federal Reserve. Now, the Nifty logging its second straight weekly gains on Friday, and all of this happening because of improved earnings, stable flows, and trading just less than that 1% below the record high touched in September 2024. But it's the rupee. That's where the focus is. Take a look at that, 89.5270. It's been impacted over uncertainty over US aid, US-India trade deal, and a pullback in the central bank's defense of a key level. They're not intervening as much as they did earlier. So that's something we're watching very closely, what will happen now going forward. But let's go across now to get a sense of the G20 summit in Johannesburg, which wrapped up over the weekend with the glaring absence of US President Donald Trump. And all eyes have been, because of that perhaps, on the Indian Prime Minister Narendra Modi. CNBC TV 18's Parikshit Luthra joins us live from New Delhi. Parikshit, it's great to see you. Give us the highlights of Prime Minister Modi's trip. There was a lot.
Great to see you as well, Amitoj. And yes, clearly the priority for the Indian Prime Minister was to secure new export markets for Indian businesses and secure supply chains at a time of great geopolitical uncertainty and tariffs being weaponized by various countries. It's also a time when we are hoping to conclude a deal with the United States, but we're not there as yet. So in the face of that, the Prime Minister held conversations with the Prime Minister of Japan, Sanae Takaichi. He held talks with the Italian Prime Minister, his counterparts from other nations, including President Ramaphosa of South Africa. And clearly the focus everywhere was how to have greater trade ties, greater defense ties, greater ties when it came to critical minerals partnership and securing supply chain of critical components. We've seen critical supply chains coming under stress different times since COVID-19. And very recently, there was a rare earth magnet crisis because of restrictions in China, which have started easing. Having said that, the Prime Minister focused on the theme of growth imbalance around the world and also over-exploitation of natural resources. There were 6 key themes that the Prime Minister focused on. One was setting up a G20 knowledge repository, an African skills multiplier initiative, a global healthcare response, open satellite partnership, and a critical minerals circularity initiative as well. But one thing that really stood out was a global AI governance framework or a global AI compact to prevent misuse of artificial intelligence. This coming at a time when India is itself setting the groundwork for AI rules.
All right, Parikshit, that's a lot to cover, but I think perhaps the highlight of everything that Prime Minister Modi did was meeting the Canadian Prime Minister on the sidelines of G20. What's coming out of that and why is that important?
You know, India is Canada's 7th largest goods and services partner in terms of trade. Our trade in 2024 was around $30 billion US. at a time when we are having trouble with the United States on the trade front. There are 50% tariffs that the US has imposed on Indian goods. India has to find new partnerships. And therefore, the partnership with Canada becomes very, very critical. Both sides have agreed to start negotiations on a CEPA, or a Comprehensive Economic Partnership Agreement, or a free trade agreement. This is very critical because before things went sour because of the Khalistani issues, we were discussing a trade deal and we were close to having a mini trade deal as well. But now things would begin in the right earnest. Negotiators from both sides would begin talks on a trade deal. That is important. Both sides have set a roadmap to have $50 billion in trade by 2030. So this is a very important guidance to leaders of both countries. Having said that, I would also point out that the Australia-India-Canada Technology and Innovation Initiative is extremely important. It's going to focus on critical minerals, on supply chains, and also on artificial intelligence and nuclear energy, very important areas for India's growth in the future. We also discussed deepening ties with Canada on a whole host of areas, such as energy, defense, innovation, and artificial intelligence. So net, both Prime Minister Mark Carney and Prime Minister Narendra Modi saying that we are going to put the differences behind and we're going to work on a very fruitful and economically important relationship between India and Canada.
It's interesting that this is now perhaps the warmest the relationships have been ever since we saw the thawing of those relationships back in June when the G7 was hosted by Canada. And then you had obviously Canada's Foreign Minister, Anita Anand, also come to Delhi and meet the Prime Minister. I just want to quickly ask you on something that you've really been covering extensively and you've been really on the ball when it comes to trade and tariffs, the relationship between US and India, that 50% tariff, when will it come down? You know, every couple of days we hear something. But I wanted to ask you, because you've been reporting on this, has there been any notable, expectation, any reportage, anything that's really come out about this?
There is a feeling that there may be some sort of trade agreement by Thanksgiving. But finally, there is no conclusive statement from either side on this front. The Indian government has been emphasizing at multiple forums and in various media interactions that we've done our part in terms of negotiating the trade deal. The trade deal has been negotiated. We've possibly arrived at a consensus between officials on what should be the average tariff line as well. Having said that, we have been at this point before at least 4 to 5 times. This trade deal has gone to Donald Trump's table, and for some reason or the other, he has not signed it. Perhaps he did not find the deal ambitious enough. He has signed some sort of agreements with almost all nations, including Brazil and other South Asian nations. India seems to be the only country with whom he does not have a trade agreement so far, even though Donald Trump in the last few weeks has said that he's positive that both sides will have a trade deal. We still have to see Donald Trump signing on the dotted line, saying that, yes, I announce a trade deal with India, which will bring down the average tariffs from 50% to maybe 10 to 15%. That is what India asks. So let's see what happens. We're hoping for a trade deal by Thanksgiving, but finally, it's now all really up to the US president.
All right, Parikshit, thanks so much for that. Fine details coming out of Parikshit Luthra, his reportage over the last couple of days. Thanks so much for that. Now, in the meantime, India is actually set to launch air cargo services with Afghanistan as New Delhi moves to reset ties with Kabul. The announcement came during the visit of Taliban Trade Minister Nuruddin Azizi, who urged India to expand trade and open cargo hubs for grains, medicines and industrial supplies. India says freight corridors connecting Delhi and Amritsar to Kabul have now been activated, with flights expected to begin soon. Indian airlines currently avoid Afghan routes because Pakistan has blocked its airspace amid tensions with New Delhi. India does not officially recognize the Taliban government, but relations are warming rapidly, driven by Kabul's break with Pakistan and New Delhi's concerns over China's growing influence in Afghanistan and the region. Well, we are back in 2 with more news and analysis of the G20. Don't go anywhere. Welcome back. Let's go back to the G20 summit and get an expert view on it. Sarang Shidore is director of the Global South program at Quincy Institute. Thanks so much, Sarang, for joining us. I want to start by asking you about the overview, that what the picture really looked like. No Donald Trump, no Chinese President Xi, no Vladimir Putin, but you did have Prime Minister Narendra Modi there, but you also had something that people are calling as the growing irrelevance of the G20. What's your take?
Thank you for having me. I think that depends on your perspective, because there's the proverbial glass half full and glass half empty situation. The G20 was never meant to actually come as far as it has. It was really came into its own in the wake of the global financial crisis in 2008. And at that time, its role, which actually performed rather well, was to coordinate a response to that crisis. Over time, the G20 has taken on more and more issues and has emerged as a sort of a global steering body for crisis management, which again, during COVID, it tried to tackle, perhaps less successfully at that time. But the other aspect of the G20, which is trying to prevent crises, which is trying to sort of have a global governance paradigm that creates a more stable, more prosperous world, has been particularly strong in the last 4 summits, including this one, when the Global South took over as chair, starting with Indonesia in 2022, then India, then Brazil, and now South Africa. And from that perspective, I think it's been significant in airing some of those priorities of the Global South. But we should not expect the G20 to become a world government or even close. The idea there is to have 19 leaders in a room to informally thrash out issues as and when they arise, and hopefully prevent issues that may not have arisen. Now, this year, of course, President Trump and the United States boycotted the summit, but it turns out most leaders went. Now, President Putin didn't because of the warrant against his arrest from the ICC. There were some other notable absences. But if you look at the roster of leaders who came, actually, there were quite a lot of them were there, including Canada's Prime Minister. And they strongly argued for a continuation of the multilateral system that the G20 represents. So it seems to me the symbolism is important. Nobody's going along with the U.S. approach of sort of pulling back from many world bodies. They want to invest more and want to enshrine some of these multilateral norms.
The U.S. made it very clear that it didn't want consensus in a joint declaration without their way in, and given that they were not there, that was going to be difficult. South Africa went ahead, led this declaration with several themes, being captured, and like you said, kind of aired, rather than a big focus on what kind of implementation will actually come out of this. But the bottom line is that there was a argy-bargy between the U.S. and South Africa. And there is always a concern about how Donald Trump reacts to certain developments. What's your take? How will the U.S. react to this, given that it is hosting this same summit next year?
Yeah, it's important to note that the U.S. has not pulled out of the G20. It just boycotted this summit. So that gives an opportunity for the U.S. to come back, and it is going to come back in Miami next year. Of course, the agenda will be different. This is an administration that makes no bones about its priorities, that are, in many cases, at sharp variance from those of the middle powers of the Global South, and indeed other states. But in a way, it's a good thing that the G20 is happening in the United States, because it forces the United States to take a role and enter the dialogue again. And so we should see some very interesting exchanges next year. I expect there to be substantial differences, but the G20 is, unlike the United Nations, seems to be a venue that the US, let's say, dislikes less than the UN or the WHO and so forth, where the US has taken a tougher stance toward these bodies in particular, not just the hosts in any particular summit.
There was enough talk about trade, at least 13 times by my count, in that document. Several mentions of how it's been weaponized, etc. My question to you was about how Donald Trump will actually react to this kind of isolation, this kind of a public snub, because he has known to use tariffs as retribution. Do you think he could resort to that after this particular development?
Well, he's already resorted to it in many, many forms and dimensions on many issues that go beyond strictly global trade. He's been using the tariff weapon to achieve certain domestic changes in countries. On South Africa, today is served with a very high tariff, among the highest that he has imposed. But he's also relaxing some tariffs. Given that inflation is persistent in the United States, he's pulled back on some tariffs on Brazil of late. So we'll have to see whether the tariff weapon will continue to be deployed with the same vigor that has been deployed since the early part of this year. Right. We may be seeing a bit of a plateauing just because of the economic ill effects of inflation. But I don't expect the US-South Africa feud to publicly resolve anytime soon. There are a number of reasons and differences there.
It does appear that Trump's boycott has actually helped make a lot of countries come together for deals. So this feels less like a multilateral summit and more perhaps like a bilateral summit, wherein other countries are coming closer. And that's where really you could have a material impact going forward. Do you agree?
Yeah, greater bilateralism is happening. That happens at all summits, by the way. Leaders attend summits not just for the stated reason, but also to have other meetings on the side. For example, this G20 had a meeting of India, Brazil, and South Africa. The grouping called IPSA, which is a grouping of 3 democracies from the global south. They were founded many years ago, but they're now coming back alive. I think that, but beyond just the bilaterals, there are also things happening in terms of trading blocs finding each other. For example, ASEAN and China have deepened their relationship of late. We are seeing the EU and the CPTPP, which is a major trading bloc in Asia and Latin America, starting to engage, which is a big deal if they actually can reach an agreement of some kind. So yes, bilateralism is increasing across countries that are not the United States, but also I think plurilateralism is increasing. And then the G20 acts as a sort of a multilateral rubric, a kind of a thin coordinating space, or provides a platform for all of these things to move forward.
Right. I want to talk to you about Prime Minister Narendra Modi as the leader. There was a lot of spotlight on him, given the absence of leaders from the US, China, and Russia. And that's natural, because if you remember, Indonesia hosted, then India hosted, then Brazil, and now South Africa. So 4 countries consecutively hosting from the global south. And he has been put out there as perhaps the voice of the global south. How much weightage would you give to this idea that there is a global leader emerging for the global south that has the gravitas to actually push back, perhaps towards the West?
Yeah, I think, and I've written about this, the Global South is not so much a unified bloc. The attempts were made in the 50s and 60s to create one with a non-aligned movement, the G77. There was a Bandung conference in 1955. In contemporary times, the Global South is what I've called a geopolitical fact, much more than it is a unified body with a single leader. Clearly, the powers like India, Brazil, South Africa, Indonesia, these are the major global south players. Among these, India is the largest, and it has taken many initiatives, has rediscovered its global south identity in recent years. But I think broadly, the global south is still a force to reckon with, because its individual member states, such as India, but also the others, are asserting themselves, have more state capacity, are able to at least influence certain actions or prevent certain adverse actions in their own regions. And by doing so, we are seeing a different sort of a dynamic than used to be seen in the 70s or 80s or even the 90s, when we had a clear unipolar order. And the United States, in the case of 70s and 80s, the US and the Soviet Union really ran the show, and their core allies. Now there are these other middle powers, and India obviously being the most prominent one, these powers are able to assert themselves and at least create some constraints on the great powers to a degree.
And how do you view the fact that you had the leaders of both India and Canada renegotiating their conversation around relationships to such an extent that we could have a renegotiation of trade ties? We've seen that thawing since June, since the G7, which Canada was hosting, and then the Canadian foreign minister arriving in New Delhi to meet the Prime Minister last month. But this is significant because of the recent diplomatic spat that happened between India and Canada.
Yeah, I think it's a welcome example of pragmatism reasserting itself. I think in a time where the global system is rocked by many stresses, of course we are seeing a war in Ukraine, we are seeing Chinese incursions in the South China Sea, we are seeing the United States sort of pulling back from global norms and international law in some cases. It's the middle powers of the global south, but also in Europe, in the case of North America, Canada, that are starting to find each other and starting to see if they can diversify relations beyond the great powers. And this is very much an early stage process at the moment. We'll see where it goes. But the process has been engaged.
Final question for you, sir. Speaking at the opening of the summit, French President Emmanuel Macron, he said, and I quote, "We are struggling to resolve major crises together around this table." He also said the G20 may be coming to the end of a cycle. I just want to get your view on whether this is overstated, given the US will, bring a lot of energy next year as its host. So what's your take?
It's the end of a cycle. I suppose he meant the global South leadership for the last 4 years. And now we move to the United States and the UK and other states that are not in the global South. I think that's healthy. I think that the fact is that for a kind of a space that aims to prevent crises or manage them and act as a sort of a thin coordinating body for global challenges, you need both the global North and the global South. You need middle powers and the great powers, all of them working together. And so the US taking over next year is going to be an important landmark because it will be forced to engage with all these countries and put its priorities on the table. And we'll see what happens, what comes out of that.
All right. Sarang, thanks so much for joining us. I really appreciate your depth of knowledge in this sphere. Thanks so much.
Thank you very much.
All right. Also at the G20 was one of the themes that South Africa had laid out, which was regarding anything to do with rare earths. And news on that now, reports emerging that the US is planning to allow NVIDIA to sell its H200 AI chips to China. Elaine Yu joins us with more on this. Elaine?
Good morning, Amitash. So the U.S. Commerce Department is reportedly reviewing changes to its policy banning these advanced NVIDIA H20 chips to China. And this morning, we saw shares of Chinese chip makers falling on this news. SMIC down 4.8% after falling even further this morning, and Hua Hong down more than 8% now. Now, this is not final according to the reports, but it does reflect growing debates within the U.S. Between the China hawks who don't think Beijing should have access to these advanced chips versus the Jensen Huang school of thought, which is that exporting the American tech stack could help expand U.S. tech influence. Now, this H200 chip, it was released 2 years ago, and it is built on the Hopper architecture, so not the most cutting-edge Blackwell architecture that can be used to train massive AI models from scratch, but it does feature very powerful memories, making it very efficient at inference tasks. And so this does signal some goodwill from the Trump administration, if true, especially after the trade truce with President Xi. But the deeper question here is, does Beijing really want these chips? So on the one hand, we've seen China repeatedly calling for these U.S. export controls to be relaxed. But on the other hand, observers of Chinese industrial policies tell me that Beijing doesn't want to be under the thumb of U.S. export controls, which have proven to be very unpredictable of late. And Beijing is now working on its self-reliance when it comes to AI chips. In recent days, Huawei has unveiled some open source AI technology that it claims can lift the average utilization rate of AI chips by about 30%. And also, the Star Board in Shanghai has fast-tracked approval for a U.S.-sanctioned Chinese GPU chip maker. More threats to list soon, and they're beginning subscription today. And according to a local media report, a top university will now allow PhD students to graduate with a design or product instead of a thesis. So we do see this push coming out of Beijing in any case, whether or not they'll have NVIDIA chips. Amitosh.
All right, Elaine, thanks so much for that. Coming up, we will take a closer look at how the Indian markets will be impacted by rising Fed rate cut bets by December and the wild swings in markets stateside. Just stay tuned. Welcome back. This is Inside India. Let's take a quick look at U.S. futures. Remember, we do have a shortened trading week with Thanksgiving on Thursday. At this point in time, the implied open looking positive across S&P 500, Dow Jones, and NASDAQ. Well, looking like NASDAQ is leading the charge. And this is keeping in mind that this futures action is coming after the Wall Street rebounded sharply in Friday's session following that steep Thursday sell-off, but was still down for the week in their worst week in more than a month. Optimism about the Fed easing really helping to fuel Friday's gains. New York Fed President John Williams saying there could be cuts in the near term without risking its inflation goal. Fed funds futures jumped to a near 70% chance of a rate cut in December from around 40% a week ago. The Fed will be going into its two-day December 9th meeting without CPI data for October and November. Neither will it have the November jobs report, which will only be released after the Fed meeting. The 2- and 10-year Treasury yields at their lowest levels in nearly a month and currently, take a look, down 3.5054%. That's what's happening. The rest of them still in the green. And remember, Boston Fed President Susan Collins, she is not in the rate cut camp. This is what she told CNBC earlier.
In terms of what I'm seeing for right now, and again, limited data, but pulling all of it together, I'm seeing economic activity continues to be relatively resilient, and there's some more robustness in demand on the demand side, both overall for consumers and for firms. At the same time, the labor market clearly has softened, and that is slower, job growth, but with the slower labor supply growth also, the unemployment rate is still relatively low, and many of the other indicators, the claims data, suggest it's relatively healthy, and inflation remains elevated, largely goods, largely tariff associated. So as I look forward, I think that there's evidence that the demand got pulled forward. So growth is actually likely to slow a bit later this year, but I do think it's likely to pick up with, solid fundamentals and as tariffs work their way through. But that means unemployment might tick up. I think we're going to see inflation continue before the disinflation. Relatively benign scenario, and that's something that I'm quite focused on.
So where does that put you in terms of policy? Let me just ask the first question, which is, how restrictive do you see Fed policy now, and is a restrictive policy appropriate policy now?
I think a mildly restrictive policy is very appropriate right now. And that is part of that relatively benign outlook that I just laid out, which is my baseline, because it helps to ensure that as tariffs work their way through the system, we really do see a return to that overall disinflation that we were seeing, many months ago. And so I do think mildly restrictive policy is very appropriate right now. And, and that makes me hesitant as I look forward to think about what the next policy moves should be. Of course, I don't make decisions before the actual meeting. There's still new data coming in.
All right, oil prices, they have extended declines after slumping over 1% in Friday's session to post its worst week in more than a month. Have a look at that. WTI crude down 0.16%, and the ICE Brent crude down 0.13%. And all of this is part of the move that could also be a reaction to Ukraine peace talks. The US and Ukraine say they have agreed on an updated peace framework to end the war with Russia following meetings in Geneva. The White House insists the plan strengthens security guarantees, but it still calls for Ukraine to cede territory, limit its military, and drop NATO ambitions. European leaders are pushing for a better deal before President Trump's Thursday deadline. US Secretary of State Marco Rubio, who is leading the talk, said there's still more work to be done.
I don't want to declare victory or finality here. There's still some work to be done. But we are much further ahead today at this time than we were when we began this morning and where we were a week ago for certain.
And all of that, everything that we've covered in the show, how's that impacted cryptocurrencies? It's been a bit of a bearish tone when you come and talk about Bitcoin, Ether, BNB, and XRP. But at this point in time, things seem to have reversed because technical analysis suggesting that it was oversold the last couple of days. Remember, it hit almost 85,000, below that really hitting 83,000, and now it's gone back up quite a lot by 3.68%. Interestingly, what you do have to note at this point in time is that despite the upswing, the sentiment has remained fragile. The crypto fear and good index is still at 10, indicating extreme caution as traders watch whether the latest bounce can actually develop into a durable shift in momentum. Now, we are also counting down to the market open in India. This is how we're shaping up. We're not too far away, 9 minutes or so, and the market opens. It's going to be muted. The focus is going to be on the US dollar-India rupee relationship. Indian rupee down. It went below its record, but it could be strengthening now. That's what you're seeing. It was down on Friday against the US dollar, but at this point in time, it could be regaining some momentum. All right. Now, India has formally implemented 4 new labor codes, the biggest overhaul of workplace laws in decades as Prime Minister Modi's government moves to modernize regulations, boost worker protection, and make hiring rules more investment-friendly. The codes, which replace 29 older laws, sets new standards for wages, industrial relations, social security, and workplace safety. They introduce minimum wage guarantees, expand social security, and for the first time, define gig and platform workers, extending legal protection to millions outside the formal sector. Now, the rules also give companies more flexibility, allowing longer factory shifts, permit night work for women, and raise the threshold for layoff approvals from 100 to 300 workers. But unions, labor unions, they remain deeply opposed. 10 of India's major trade unions have slammed the government's rollout of new labor codes over calling for the overhaul of a deceptive fraud against workers. The Centre of Indian Trade Unions has already led protests in Bhubaneswar, in Orissa, where hundreds of workers burned copies of the new codes ahead of nationwide demonstrations planned for Wednesday. The Labour Ministry has held multiple rounds of consultations, but has not commented on the latest demands. Also, India's market regulator is looking to expand investment options for real estate and infrastructure trusts in a bid to boost participation and capital flows into both sectors. SEBI chairperson Tuhin Kanta Pandey said the regulator will also work to include REITs in market indices. He also added that it is coordinating with insurance, pension, and provident fund regulators to help drive broader participation. The market regulator is further examining whether private infrastructure investment trusts should be allowed to invest in greenfield projects. This latest push follows SEBI's earlier proposal to let foreign investors and qualified institutional buyers participate as strategic investors in the trusts. All right, joining us now is Shibani Kurian. She is a senior fund manager and head of equity research at Kotak Mahindra AMC. Thanks so much for joining us, Shibani. I really appreciate you being here. We want to start with what we just spoke about, SEBI's general rethink. There's been this deregulation drive. Many of SEBI's reforms really reflecting the concept of easing of compliance, especially for trusted or low-risk categories, and for raising capital, IPOs, rights issues, etc. But also protective regulation, like in derivatives. What do you have to say about the latest, consideration?
Hi, and good morning. So I think, whether you look at the regulator, SEBI, or the government, I think the policy initiatives that are being taken is to focus on ease of doing business and, of course, to provide capital where it's required. Specifically coming to the infrastructure sector, so what has been happening over the last maybe 5-6 years, there has been considerable push as far as public sector capex has been concerned, which means that the government has been doing the heavy lifting as far as promoting infrastructure and capex in the country, both the center and the state. However, now it is possibly the onus of the private sector to pick up pace. Private sector capex has been a challenge. However, now that overall capacity utilization levels in the economy as a whole has reached a point where you need incremental fresh capex and infrastructure growth, I think the overall idea is to ensure that capital comes in the right way, and there is participation from the private sector to boost the overall investment economy of the country, which is necessary for long-term growth. I think whether you look at the fiscal policy, the changes that have been announced by the regulators such as SEBI, the overall framework is to make business easier and to also consolidate many laws into one so that, again, investment becomes something that comes on the table.
It's interesting you mentioned that private sector capex has been a challenge. The key question here is, has the government done enough? Is it doing enough? Is it alluding to enough? Is it making enough considerations? And has the private sector actually gone ahead and felt that energy, that warmth from the government? Because the numbers are not reflecting that, are they?
Yes, so you're right. While, of course, at a balance sheet level, if you look at private sector, over the last 5 years, there has been significant deleveraging of the balance sheet. Debt equity ratios of India today are possibly the lowest that it has been. So there has been a considerable amount of balance sheet cleanup that has happened. I think the overall policy initiatives that are being taken are trying to ensure that the private sector along with the public sector come together to push the capex growth. I think it's a matter of time. As I mentioned, if you look at the headline capacity utilization levels and the data that is provided by RBI from time to time, it seems to suggest that we are at a cusp where incrementally private sector capex should start to pick up. Interest rates have come down. And again, the overall environment is such that incrementally, especially in certain sectors where, again, capacity utilization levels are at its peak, we should start seeing private sector capex come through. However, the nature of capex this time around will possibly be different than what it was in the last decade, with new age businesses possibly requiring more capital, and that's where the focus will be.
Okay, it's interesting you said that. I have two questions as a follow-up. The first is, could you give a time? Could you predict a time? I know that I'm not going to hold you to this, so don't worry about that. But just predict a time for us when this actually starts to happen. And since you said new age technologies and industries, AI has to be considered. You know, AI valuations, the bubble talk, all of that concern is there. India is grossly underperforming when it comes to investment in AI. So can you give us a comment on these two aspects, timing and AI?
So again, timing is something that is, again, very difficult to predict. But as I said, that if you look at data seems to suggest that we are at the cusp. One data that I mentioned before, you look at capacity utilization levels across industries, especially in some sectors, for example, steel, cement, etc. We are possibly at levels where you incrementally would require fresh capex, and that's something that we will wait and watch out for. The second question that you had on AI, and of course there is this big debate going on between investment in AI and where Indian IT services are concerned. There are two facts here. One, if you look at the opportunity set, especially for data centers, we believe that there is a huge capex opportunity for data centers in India. Today, India's share in the overall data center capex is fairly muted. However, incrementally, we are seeing announcements of setting up new data centers in India, and that should lead one chain of the capex debate that we are having. The second question on AI and where India stands, we believe that for enterprise adoption of AI, Indian IT services plays a critical role. For enterprises to adopt AI in a meaningful manner, you will need data stacks to be integrated, probably move to the cloud before AI becomes enterprise ready. And that's where Indian IT services plays a role. And we believe that the nature of work is probably going to shift towards enterprise adoption of AI. And that's something that we believe will drive growth.
Right. Given what you just said about private equity investment, the future around AI, there are uncertainties that make it difficult to have, an idea around timing and make that prediction. So I do apologize for asking that question. It's difficult, I understand. So I want to ask you, your research has also indicated something about US tariffs, that they've started to take effect in India, but they are not yet fully effective. The assumption is that it is going to be reduced at least to 25% from 50%, right? So my question is, when will that start to be ineffective? The effect, what you have right now is that tariffs are getting effective, right? But when will that unwind? When will that rewind?
So I think your guess is as good as mine. We are, of course, hoping that there is a conclusive trade deal sometime in the near future. And I'm sure, the governments on both sides are working on it. However, again, timelines are something that is difficult to predict. However, when you look at the tariffs, of course, at a headline level, the tariffs are fairly elevated. However, they are focused on a few sectors, especially on the export side. So sectors such as, for example, textile, gems and jewelry, aquaculture, these are segments that get impacted. And when you look at data and the trade data that comes out on a monthly basis, you will see that these segments do get impacted. However, larger sectors, for example, pharmaceuticals to a large extent, IT services, which forms a large part of India's exports, these are sectors that are still kept out of the ambit of the tariff situation. However, putting a timeline as to when we will find a final trade agreement is actually difficult. However, that will be a trigger that the market will possibly wait and watch out for.
Okay. Interesting. I just want to push back a little bit on another aspect around this private capex conversation. Why aren't policies really translating into solid action? Because it's unclear what's really holding them back. What are they waiting for?
No, so you're right. This is a dilemma that we keep debating at our end as well. However, when you look at history, prior to the 2020 period when corporate India started deleveraging their balance sheet, there was also a period of pain that corporate India went through because of high debt, significant amount of capex intensity, which resulted in delayed projects, etc., which again impacted profitability. So I think that the last 4-5 years have been a period of consolidation correction and balance sheet cleanup. Today, as I mentioned, debt levels are possibly at its lowest. Corporate India cash flows have improved considerably, and ROE or return on equity of Indian markets are possibly at, again, a fairly healthy level, with at about 14 to 15%. So I think the table and the setting is right. It possibly takes a little bit of time to get the confidence to put in the new capex. Policy reforms that have been taking place, including what you mentioned on the labor side, will possibly be an impetus to get that private sector back on track.
Okay, that's interesting that you mentioned the labor conversation, the labor code that's been introduced by the Indian government. From an investment perspective, I want to ask you, is that going to increase productivity? You seem to suggest it will, but by how much? And what impact could there be on companies, and any meaningful impact on your particular investment thesis?
So again, let me caution you here that it's too early to possibly put a number in terms of how much of productivity benefit does it bring to the table, how much capital it brings to the table. But again, this was long pending, and therefore, number one, it makes ease of doing business something that is possibly apparent, because it brings together 29 existing labor laws into 4 comprehensive labor codes. Again, as I mentioned, as it gains scale, as people get better understanding of what this means, it will over a period of time attract foreign investment. That's what our hope is. However, remember that there has to be nationwide acceptance of the labor laws. Execution becomes important. And of course, alignment of the states with the labor code also remains a fact which will play out over a period of time.
I just want to do a bit of a history check out here, because the last time there were these reforms that the government introduced, there were huge protests, and that was around farm and agriculture, and the government had to take them back. These are labor codes. We're going to be seeing nationwide protests on Wednesday. You factored that in your answer, but I just want to stress on how the market is potentially, in your view, going to react to this development, keeping in mind you have these protests on Wednesday.
So I think the way the market looks at it is that these policies are a step in the right direction. As I said, execution, implementation, these are things that will take time, which is why I said that, it's very difficult immediately to build in how this will have an impact in terms of either attracting new investments, capital, or productivity. So we will have to wait and watch. Clearly, the modernization of the labor laws, along with what has been, announced so far, this was something that has been long impending in India. This essentially means that the policy focus is in the right direction, and that brings a lot of comfort from a market perspective as well.
Right. Okay. I want to ask you about the RBI. Effectively about the rate cut. What's your position? Whether it will happen or not, but also about the rupee weakening, because the RBI has clearly been intervening, but it seems to have paused that intervention on Friday when the rupee hit a record low. What's your take?
So I think for RBI, further policy rate cuts and what action they will take will be data dependent. At this point in time, our belief is that the December rate cut possibly hangs in a balance. A lot of factors are going to play a role. On one hand, you are seeing inflation clearly undershoot. CPI inflation is at its lowest level ever and is considerably below RBI's medium-term range, which is at 4% plus minus 2%. So from an inflation perspective, there is clearly comfort. However, RBI will look at possibly how growth plays out in India. Second important factor that RBI will, in our opinion, look at is the impact of the tariffs on the trade perspective and therefore its impact on growth. And the third factor, of course, is what the Fed does and what global central banks do. So at this point in time, we think that, further policy rate cuts are possibly hanging in a balance. It's difficult to call and say whether December we see a rate cut or not. I think the overall focus of RBI is to ensure that there is adequate liquidity in the system, which helps in supporting credit growth. And if you look at the data on credit growth has been inching up. The latest monthly number shows that credit growth has moved up above 11%. And therefore, I think RBI looks more at overall stability rather than, just one or two policy meetings in terms of rate cut decisions.
All right. Thank you so much. We're completely out of time. I have so many questions for you, but such little time. That was Shibani Kurian from Kotak Mahindra AMC. All right, moving on, a tragic crash at the Dubai Air Show over the weekend as an Indian Tejas fighter jet crashed in a ball of fire during an aerial display. Eyewitnesses say the jet had been flying less than 10 minutes when it went into a nosedive and hit the ground. The Indian Air Force has confirmed the pilot did not survive and says a court of inquiry has been ordered to investigate the cause. The crash marks only the second known Tejas accident. The jet, powered by a General Electric engine, is at the heart of India's push to replace its aging Russian-built fleet, raising fresh questions about safety as the aircraft moves toward wider deployment. All right, the Indian markets have joined the trading day. We will look at some movers in Mumbai and set you up for your trading week ahead. But take a look at what's going on as the markets opened. It is positive, 26,114 really, 0.17% up. The rupee also strengthening. We'll be back right after this break. Welcome back. Indian markets, they're coming online. Have a look. It's looking positive, 0.18% up, Nifty 50. The rupee also strengthening. We're going to be watching whether Nifty 50 continues to show its positivity that we've seen in the last week. And remember, it went past its September 2024 high. At this point in time, it's below that, somewhere in the range of 26,240. Will it go past that? That's the key question. We're going to be watching it very closely. And who are going to be really the big drivers? Take a look at that. Let's look at some of those particular movers just right now. Tata Power has signed commercial agreements with Druk Green Power to jointly develop Bhutan's Dorji Lung hydropower project. The project will be executed through a special purpose vehicle, with Druk Green holding a 60% stake and Tata Power the remaining 40%. Around 80% of the power generated will be supplied to India. Once completed, the run-of-the-river plant will become Bhutan's second largest hydroelectric facility and the biggest public-private partnership hydro project ever undertaken out there. Take a look. At this point in time, up 0.31%, 0.30%. Tata Chemicals also has approved new investments to expand capacity at two of its major facilities in Gujarat and Tamil Nadu. The company plans to boost soda ash production at its Mithapur plant over the next 2 years and also increase silica production at its Cuddalore plant, a project expected to be completed in just over 2 years. The shares, 0.35% up. Also, a quick check on shares of Kotak Mahindra Bank. The private lender has announced a stock split. It's first in 15 years, I beg your pardon. The bank will divide one share into 5 aiming to make its stock more affordable and attract more retail investors. The move comes as Kotak marks 40 years of operations. Kotak stock is up nearly 17% so far this year, outperforming peers ICICI and HDFC. Major peers last split their shares years earlier, HDFC Bank in 2019 and ICICI in 2014. Meantime, Axis Bank is gearing up for a fresh fundraise of around $560 million. The lender says it will raise about $223 million via debentures with an additional $335 million through a green shoe option. There's no timeline yet, but this is part of a broader capital plan announced in April to raise roughly $4.67 billion in debt and another $2.67 billion through equity. The shares right now up 0.28%. That's all the time we have today on Inside India. This is CNBC. Axis Middle East is up next.